Assalamu alaikum everyone, this is Mohammad Sohrab and I'm lecturer at Elma University. Guys, today we will discuss about common size analysis. Okay, when it comes to financial statement analysis, there are different analysis. One of the most related to that is called as common size financial statement analysis. We prepare common size financial statement analysis by dividing every number of financial statement either by total sale or total asset. Like if we are preparing common size of income statement, we will divide all income number with its representative value, which is sales. Okay, if we are preparing common size of balance sheet, then we will divide every number of balance sheet. So that means, first of all, we need to understand the statements on which we are going to perform our analysis. Okay, we will perform every analysis on financial statement, and financial statement consists on balance sheet, income statement, statement of cash flow, statement of cash flow, and uh, statement of change in owner equity. Okay, so first of all we have to understand these statements. Okay, first of all, if you talk about balance sheet, what actually balance sheet is, guys, balance sheet is a listing of a company value over resources and a listing from where company has bought those resources. Okay, so there are two ways to bought resources. One is when owner bring his private saving into the business. Okay, second way is when we borrow loan and or we make purchases on credit. Okay, so what we understand here, we understood that balance sheet is a listing of a company valuable resources, its assets, its cash, its equipment, its furniture. Okay, and other side of the balance sheet reflect that the source of financing to buy those assets, and we have two sources to buy our asset. One is equity and then other is liability. Okay, so now let's understand what actually income statement. Okay guys, second primary statement is income statement. Okay, what actually income statement tell us about the business. Income statement consists on sales, expenses, and then finally calculated in profit or loss. Okay, so let's know the meaning of revenue or sales. Sales, revenue mean the amount of asset generated in doing business. Okay, and different companies generate revenue in different ways. If we talk about Walmart, how Walmart generates its revenue, Walmart generates its revenue by keeping goods in its shelves which you and I buy. Okay, so this is how Walmart generates its revenue. Now if we talk about Microsoft, how Microsoft generates its revenue. Microsoft generates its revenue by creating software which you and I buy. Okay, in the same way, so revenue mean amount of asset generated in doing business. Okay, and our focus should be asset generated should be more than the amount of assets consumed. How, like if we talk about Microsoft, how Microsoft consume its assets. Microsoft consumed its assets by paying salaries to its employees, by buying raw material from its supplier. Okay, so this is how Microsoft consume its asset, and our consumed assets should be lower or less than our generated assets. Perform common size analysis on financial statement. Okay, we prepare common size analysis by dividing every number of financial statement either by total sales or total asset. Like if we prepare common size of income statement, for that we have to divide every number of income statement with total sales. Okay, and with common size statement analysis, you can compare financial statement of same company across the time and different companies across company at same time. Okay, we can do analysis in two ways. Okay, we can compare different companies at same time, and we can compare different times for a single or a same company. Okay, we have two types of analysis. Okay, One is vertical analysis, and then second is horizontal analysis. In vertical analysis, we compare every number of income statement or balance sheet with its representative value. Okay, like in income statement it is sales, and in balance sheet it is asset. Okay, so in vertical analysis we compare every number of these statement with its representative value. Okay, as second analysis is horizontal analysis. What actually we do in horizontal analysis, we divide every number of current year with its base year. Okay, so we divide every amount with its base year. Like if we talk about, if we are doing our calculation for 2022, then we will compare every figure of 2022 with this base year, which will be considered as 2021. Okay, so let's do how we do. So simply we can understand common size analysis as expressing figures in percentage. Okay, for example, if cash is 40,000, okay, and assets are for 1 million, then cash will be 4% of the total assets. Okay, and use of percentage is preferable than the use of absolute value. Like firm A earn 10,000 and firm B earn 1,000, which will be considered as profitable? Definitely firm A, in your opinion. Okay, in your opinion, firm A is considered as profitable because it has earned 10,000, and firm B has earned just 1,000. So you all will consider as firm A is profitable. But before making such opinion, we have to understand that how much equities do these firm have. Now guys, here we have income statement of a company. Okay, and if we see its gross profit has grown in term of absolute value. Okay, and if we see its absolute value, if we see its absolute value, then it has gross profit percentage has dropped over the year. This means that cost of goods sold has increased. Okay, and it is not in line with the increase in sales. Okay, and cost of goods sold of this company has increased, but it is not in line with the increase in sale. This means that we have not increased our sale prices as much as the prices of cost of goods sold has increased in the market. Okay, so here in this year we have purchased our raw material at higher prices, but we have not charged same price in our sales figure. Okay, so we sold to our customer at lower prices than if we compare it at the price we have purchased from our supplier. Salary of the employees has decreased over the year. Okay, if we analyze the data, it clearly shows that salaries was 7% of the total sales, but in next year it has declined. That means our employees has worked very efficiently. If we talk about rent and other expenses, they are almost constant against the percentage of sales. Oh guys, here we can see that sales of the company is 1 lakh. Okay, and its cost of goods sold is for 60,000. Okay, that means cost of goods sold is 60% of the total sales. So we can easily calculate our gross profit. Definitely if we deduct this 60% out of 100%, our gross profit will be 40% of the total sales. So how we will calculate common size of income statement? For calculating this, we have few figures. Okay, so here we will divide every number of income statement with its representative value. Okay, it is 1 lakh rupees. Okay, so sale is the representative value of all the figures, so we will divide every figure with its representative figure. So we have to divide this with this amount. Okay, so it is around 60%. Okay guys, it is 60% of the total sales. What does that mean? That means if we sold goods to our customer and we have collected 100 rupees from our customer, out of that 100 rupees 60 will be goes to our suppliers. Why? Because we purchased raw material from our suppliers. Okay, so a single product which we have purchased from our supplier at 60 rupees,
we have sold it at 100 rupees. Okay, so we have sold it at 100 rupees. Okay, then second is GP stand for gross profit. Okay, and here figure of gross profit is 40,000. Okay, and now we will see its percentage. We will see it in percentage. Okay, in term of sales, how much gross profit do we have right now? So it is 40,000. Definitely, if cost of goods sold is 60%, so out of 60, out of 100, 60 will be deducted. Okay, so remaining value will be 40%. So let's calculate it. It is 40,000 divided by 1 lakh rupees. Okay, it is 40%. Okay, so our gross profit is 40% of the total sales. Okay, if we made sale for 100 rupees, out of that 40 rupees will be considered as our gross profit. So let's compare our salary with our total sales. Okay, how much salary we have consumed in generating this sales. Okay, how much salary we have consumed in generating this sale. Okay, so we now we will see that how much salary we have paid to our employees against their work, and against that how much sales we have did. Okay, so here it is 7%, so I will divide this figure with 1 lakh rupees. So it is 7%. Okay, so it is 7%. What does that 7% mean? Does that 7% mean if we have earned, or if we have collected 100 rupees from our customer, out of that 7 rupees goes to our employees in the form of salaries. So here we got to realize that if we did sell for 100 rupees, out of that 7 rupees will be goes to our employees. Okay, so here our salary is 7% of the sales. Okay, so it is 7,000. So sale is for 1 lakh, so its salary is 7,000. Okay, if sale is for 2 lakh, definitely salary will be 14% of the total sales. Okay, so here sales is 7% of the total sales. So let's calculate the figure of rent. Okay, again we will divide this figure by 1 lakh rupees. It is 5% of the total sales. Okay, what does that 5% mean? 5% mean if we did sales for 100 rupees, out of that we have paid 5 rupees in the form of rent. Okay, so if we did sales for 100 rupees, out of that 5 rupees we have paid in the form of rent. Okay, so this is how we can see that how much amount we have consumed in different expenses. Okay, so common size of income statement let us know that the sales which we have generated, the asset which we have generated, where we have consumed it. Okay, so the sales is the generated asset, and these expenses are the consumed asset. Okay, so this common size statement help us to know where we have consumed our asset and what is the percentage of consumption. So we can easily analyze that what is the percentage of consumption, so we can control it if it is too high. Okay, so it is very simple to calculate it. Now we will calculate total expenses. Okay, we will do comparison of total expenses with our total sales. So we will see that how much overall total expenses we have consumed in doing this sales. Okay guys, in generating of 100 rupees of sales. Okay, in generating 100 rupees of sales, out of that 12 rupees we have consumed in the form of expenses. Okay, if we have generated 100 rupees in asset, out of that 12 rupees we have consumed in expenses. Okay, and 60% mean 60% of the amount has been consumed in cost of goods sold. That means our raw material is comparatively more expensive than other figures. Okay, so raw material is comparatively more expensive than our other figures. It is 60% of the total sales. So let's see the profit margin, how much profit we have earned uh, against per rupee per dollar of sales. So let's see how much profit we have earned against per dollar of sales or per 100 rupees of sales. Okay, so for that we will divide this profit figure over our sales figures. Okay, and it is 28%. What does that 20% 28 percent mean? What does that 28% mean? This 28% mean if we have made sales for 100 rupees, out of that 28 rupees will be our profit. Okay guys, we can see that salaries of the employees has declined over the year. Okay, salaries was 6% of the salaries was 7% of the total sales. Now salaries are 6% of the total sales. Okay, so that means our employees has worked more efficiently than previous year. Okay, so here in this year our employees has worked very efficiently, and if we compare it with previous year. So in this year we have paid 6% of the of our we have paid 6% of our total sale to our employees. Okay, if we have collected 100 rupees from our employees, then out of that 6 rupees goes to our employees, and rent remain almost constant during the years. Okay, so overall our expenses has declined. Okay, if we compare it with previous year, our expenses were 12% of the total sales. So here in second year our expenses are 11% of the total sales. Although if we see it in absolute values, then our in absolute term our expenses were increased during the 2021. Okay, but in term of percentage our expenses were declined. In term of absolute values our expenses were increased, but in term of percentage values our expenses were declined during the year. Okay guys, now we will see how to calculate common size of balance sheet. Okay, but right now here we will divide every number of balance sheet with its base year. Okay, so here we are doing vertical, so here we are doing horizontal analysis. Okay, what we do in horizontal analysis, we divide every figure of our current year with its base year amount. Okay, so let's calculate our horizontal analysis of balance sheet. Okay, so here first figure is cash. How will we calculate common size? How will we calculate horizontal analysis of cash? We will just divide this current year figure with the base year figure. So it is around, first of all we will see cash. So if we see the cash, it is 150% increase in our cash figure. Okay, so what does that mean? That mean in 2020 for generating 100 rupees of sales we have required 30,000 in our cash. Okay, but in 2021 for making 100 rupees of sales we have required 45,000 in our cash figure. So here cash figure, so here our cash balance has increased 150%. Okay, so let's see account receivable. Our second figure is account receivable. So simply we will divide this account receivable with this amount. Okay, so it is 100%. So there is 100% increase in our account receivable. Let's see inventory. Okay, again in inventory there is 150% increase in our inventory. That mean if during 2020 we have required 20,000 of inventory for making a sales. Okay, for making 100 rupees of sales we have required 20,000 in our inventory, but now in 2021 for making 100 rupees of sales we have required 30,000 in our inventory. So right now we are holding more inventory in 2021 if we compare it with 2020. Okay, let's see accounts and building. So we divide this figure with this figure. Again, there is an increase in equipment and building. Okay, this is another asset. So again in 2021, our equipment has increased 125% if we compare it with 2020. So here in 2021 we have required more equipment and building than 2020. So for making 100 rupees of sales, now right now we have required 2,50,000 in our asset balance, okay, in our equipment balance. But this figure was 2 lakh in 2020. So right now in 2021, almost we have required more asset to make a similar sale during the 2021. Okay, so let's calculate our final figure of asset, total asset. Okay, so here almost we have required 25% more asset uh, during 2021 if we compare it with 2020. So let's calculate second side of the balance sheet. It is uh, liabilities and equity. Okay, let's see this amount, how much, whether we have increased this figure from by honor equity, or we have increased this figure with a liability source. We have two sources to increase this figure. Okay, now this figure is 125%. So let's see how we have increased this 25%. We will see how we have generated this 25% in asset, whether it is generated through liability source or it is generated through capital source. Okay, so let's calculate common size of account payable. Okay, so it is, there is 10% increase in our account payable. Okay, overall there is 110% increase, but then loan is increased by 120%. Okay, and overall liabilities were increased 110%. Okay, so there is overall 110% increase in our total liabilities. So let's see how much increase we did during 2021 in our capital figure. Okay, it is 75% increase. Our that mean our capital has declined during 2021. Okay, if it as it is less than 100%, that means there is decline in our capital. Okay, so during 2021 it was 150,000, and during 2020 it was 2 lakh, okay, 200,000, but now in 2021 it is 1 lakh 50,000. Okay, so there is a decline in our total capital. So overall there is a similar change in our liabilities and equity. Okay, as the changes happen in our total assets.